volatility adjusted, this move we've had in gold has just been tremendous. And if you volatility adjust that to Bitcoin, it kind of tells you that Bitcoin is going to have a tremendous move, which I expect. I think Bitcoin is going up to 180,000 within the year. Young guys, be patient. Gold is just in this specific case leading the way, but Bitcoin is not far behind to be trading on that thesis. There are many other reasons why Bitcoin still has room to rally.
Dan Tapiero begins by addressing a core paradox of gold. It performs well in seemingly opposite conditions. When liquidity is abundant and markets are soaring, gold can thrive. But it can also rise during times of geopolitical tension, uncertainty, and fear. This dual nature makes it unique, a safe haven in bad times and a confidence asset in good times. Yet, ironically, Tapiero argues that gold remains underowned by institutional investors, particularly in the U.S.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Gold can do well when liquidity is flowing and the market's doing well, or gold can do well when people are nervous about, things changing in the world. Geopolitical things, the trade tariff back and forth things. So gold is, I think, actually an asset that is yet to be discovered by institutional investors. And I know that's hard to believe, but I've been in this gold space for a long time. And my guess is that most institutions in the US, certainly, maybe it's less the case for foreigners, don't really own gold. And if they do, it's only, 3 to 5% or something else. So gold is a hedge within the traditional system. To me, Bitcoin is a hedge against everything in the traditional system, including gold, because the denominator is essentially fiat or dollars, right? Dollars and euros. That's the denominator to all assets in the, I call it analog old world, right? So no matter what you own, bonds, stocks, even gold, they're all basically priced in dollars. And if the US government decides that it's going to do a lot of fiscal spending, or the monetary authorities decide they want to devalue the dollar, that entire world of analog assets devalues against Bitcoin. So that's kind of how I see it, the difference. And gold is leading here because especially the Chinese, who are the biggest buyers of gold, people don't realize that I think it's about 60% of total world gold demand is China and India. And then the emerging markets, if you throw them in it, I think the number is around 85%. That's the last time I looked at those numbers, which probably hasn't been for at least 5 years. But Americans don't really own gold, generally speaking. So, and they don't need to, because the dollar has been relatively stable and we've had good policy, generally speaking, over the years. But you can see now this gold buying is all foreigners. They are nervous about Trump. I think it's unwarranted. I mean, I'm thrilled that the price of gold is going up. I'm thrilled that GBI's business is, doing well. I think the population there sees what's going on. They're a little nervous. And then you start getting price action in gold. And then other central banks, as you know, have been diversifying into gold the last few years. And so all of this is just leading the way, right? Bitcoin is doing its own thing. Bitcoin's at 80,000. People forget that in the last 10 to 12 years, gold is actually down 99% against Bitcoin, right? It's just small numbers, right? 12 years ago, Bitcoin was whatever number, $50. And it went from $50 to 80,000. Well, that outperformed. Gold is only up 4x from 08, 09, 4 times. So I know because I'm an owner of both, and my gold position used to be a lot bigger than it is, relatively speaking. So let's not forget that. Bitcoin, and Bitcoin is a lot more than just digital gold. I mean, like, let's not even start on that. So I would just say, young guys, be patient. Gold is just, in this specific case, leading the way. But Bitcoin is not far behind to be trading on that thesis. There are many other reasons why Bitcoin still has room to rally. I think that venture investors and growth investors, as opposed to traditional investors. So traditional would be like pension funds, insurance companies, massive pools of capital, the trillions of dollars of US savings that's held privately. That money tends to only seek very simple returns, 5 to 10% a year. Maybe sometimes they'll decide, oh, okay, we'll allocate a small portion to riskier things, like 3% to venture, or 3% to growth equity, or 2% to gold. But it's still very rare. They're looking to have an income, and they don't want to take the risk. Also, those are very bureaucratic institutions. And so, it's a little bit like, if you're the guy on the investment committee, on the 9-person investment committee that makes the choice to invest in Bitcoin, and okay, yeah, it goes up 10x, but then the 2-year period where it drops 90%, maybe you lose your job. I mean, people, the digital asset ecosystem, the digital space, Bitcoin, all the cryptocurrencies, all the companies we've invested in, is still volatile, right? And I think that that's the one thing. Gold is not volatile compared to Bitcoin and digital assets. So you could argue, volatility adjusted, this move we've had in gold has just been tremendous. And if you volatility adjust that to Bitcoin, it kind of tells you that Bitcoin is going to have a tremendous move, which I expect. I think Bitcoin is going up to 180,000 within the year.
Tapiero provides a sobering yet insightful outlook. He believes the U.S. economy is clearly slowing and that we're in the midst of one of the most aggressive fiscal tightenings in modern history. While tariffs and spending cuts are tools of this tightening, they're being applied without adequate coordination with the Federal Reserve. There is no monetary offset at present. In fact, Tapiero argues that the Fed is behind the curve and risks letting the economy stall before taking action. He points out that the VIX, the volatility index, has only hit 65 times in the last 35 years.
Maybe not by year end now. I mean, it's biding its time. I've always thought it would hold around 100,000. But the gold price should be giving Bitcoiners a high degree of confidence. And it's just that the age in the space, the average age, everyone is so young and they want, they want the moon right away, when moon and all this other stuff. They also wasted a lot of energy. I find our space is wasting a lot of energy on things, the meme thing, the meme coin thing, I think is valid, but it uses up so much energy. The Trump coin used up a lot of, cash and energy and focus. I'm not saying it's a bad thing. I just think that, there's so many different areas within this digital asset world, stable coins, DeFi, DPIT, AI agents. There's so many things going on. It's just pulling energy away specifically from, let's say, Bitcoin and ETH, which I do think are the two core assets. I know ETH has underperformed recently, but that's another thing where just people are throwing in the towel and the sentiment is the most negative it's ever been. Everything runs on ETH. And okay, they've given up some of the monetization of ETH, to some of the L2s, and, some of it's been siphoned off, but it's not going anywhere. It's core to the ecosystem. And I think Solana also now is proving to be the third one. I think those three are really they've achieved network effect now. The other ones, Ripple has survived, but it's centralized, and I think it's a different kind of animal. But
Definitely.
I would just say, okay, be a little patient. The macro backdrop, which is leading to the price appreciation in gold, will filter over at some point to Bitcoin. I think we're probably seeing the low of panic. You know, theoretically, I guess the stock market could go down and retest again. But, you know, we priced a lot in at a 60 VIX. I tweeted yesterday that we've only hit 60 on the VIX 5 times in the last 35 years. And those are extremes. Doesn't mean the market can't drop more. I think for the market to continue on its bull run, which I do suspect it will, we really need the Fed to help offset some of this fiscal tightening. And I think, you know, fiscal tightening is Doge coming in and getting rid of whole departments. Fiscal tightening is, you know, the authorities, the administration, Doge, whoever, cutting back spending in areas that they're not completely getting rid of. And then tariffs also are kind of tightening of fiscal policy. So they've attempted probably the largest fiscal tightening, certainly in my lifetime. And at the moment, there's no monetary offset. So, okay, the dollar is weakened, but, you know, it's weakened 10% in the last few months, but it's really only weakened 5% from where it was a few months ago. So that helps a little bit. That's a little bit of an offset. But the reality is the U.S. economic data is slowing, and I think will continue to slow. And the Fed is behind, and the Fed needs to cut rates. Now, it's not going to cut rates until it sees the whites of its eyes of inflation dropping. But there are many measures of inflation that are low. There are some that have spiked up, but they've spiked up to such a degree, it's sort of out of a fear of tariffs, and to such a degree that I think that it probably curtails growth. So, once again, you know, this policy, the policymakers are not coordinated. If I go in as the Trump administration and I say, we're going to undertake this massive fiscal tightening, you got to get the Fed on board and say, listen, we know what this fiscal tightening is going to do to growth, and we need you to accommodate us.
Tapiero's base case is for Bitcoin to reach $180,000 within the next 12 months, even if it doesn't happen by year-end. He sees $100,000 as a strong consolidation point in the short term. The current gold rally, in his view, should provide Bitcoin holders with significant confidence that the broader macro trend is supportive of hard assets. Importantly, he reiterates that while volatility is an inherent feature of Bitcoin, it should not deter serious investors. In fact, when volatility is adjusted, the recent rally in gold is telling us that Bitcoin's next major move could be even more explosive. Please like and subscribe.